Good morning, everybody. My name is Gareth 𝗶𝗁𝗶𝘁 here with VerifiedInvesting.com. Thank you so much for tuning into the game plan where I am going to cover it all. Remember, folks, we had some crazy stuff over the weekend, really heartbreaking stuff going on in the world, but my job here is to keep it data-driven. And that's what I'm going to do. So we're going to look at the charts. We're going to look at the data coming up on the screen in the charts and decipher levels to trade. All right, guys, so let's get right into it. Let's jump over here. The first thing I need to do is we have to go over Friday's jobs report because it was very, very, very misleading. I want this to be the beacon of trust, this show, the game plan. I want you guys to understand the underlying data, and that's what we're going to do right now. So if we look at the jobs data on Friday, we got 336,000 jobs added. However, that is faulty. It was not really 336,000 jobs added. Why? Well, as we can see, part-time jobs, full-time jobs fell sharply. So this number encompasses part-time and full-time work. Essentially, if you're unemployed, meaning no jobs at all, then you're considered to be in that unemployment level. If you have a part-time job, you're counted in here. Now, the data showed us that, again, full-time jobs fell sharply while part-time work gained. What we have to understand about this is that, think about this, right? While there might be some people that are taking part-time jobs because they want to, generally people want to work full-time, especially when you have inflation where it is, right? I mean, how do you even make ends meet working part-time unless you're forced to because you can't find a full-time job? So that's key. In the last 3 months, 692,000 jobs, full-time jobs, were lost. So again, we're starting to see a picture here of an economy that is no doubt starting to weaken. So again, 692,000 jobs lost over the last 3 months. Now, again, overall, we've seen a gain in the jobs data. We've seen a gain. Why? Because part-time jobs have gained substantially. Okay, since June 1st, 1.2 million part-time jobs have been gained. So what we're seeing here is this rotation from full-time work to now jobs and companies saying, hey, listen, we're not ready to commit to you full-time, but we'll take you on part-time to help fill some holes. Ultimately, that is stage one of a jobs market that is weakening. Now, if we remember on Friday, we initially saw, when I was doing this game plan, yields were beginning to spike, and then we saw them starting to come down. In fact, let's take a look at that right now. Let's go right into the 10-year yield. So on Friday, right, we saw, again, those yields beginning to pop and then coming back in. Now, here's your daily yield. So we can see very, very clearly that the yields, again, initially went up and we retested that topping tail high. Let me zoom in on that. Let's take a look at that and go closer. All right, remember, technical analysis dictates that a topping tail is paramount. This is the most important thing you pay attention to. That is a top until proven otherwise. What does that mean? Going into Friday, and like I said, in this very game plan, I said to you, listen, we were popping up here. We tested those highs. You have to have a daily close above to negate the bearishness of this topping tail candle. What happened? We pulled back on yields. Now, the yield still ended positive on the day, but interestingly enough, look at today. We're starting to come down. Interestingly enough, we know that yields are coming down because people are running for safety. Safety is in U.S. bonds, right? When you have instability in the world like we are seeing in the Middle East, that means that people are going to run to bonds. When they buy bonds, yields will be forced to go down. That's how it works. Okay, so we have that intact. Please understand that until proven otherwise, this is still your topping tail high. That is all that matters to me per the chart. Remember, being a technical chartist or a technician, whatever you want to call yourself, it means that you have no emotion. You look at the chart, you say that candle is a topping tail, as it is a bearish signal. Unless we close above here, you are now bearish. That's just the way it is. X plus Y, it's 1 plus 2 equals 3. Very, very simple stuff in that respect. All right, now I do want to show you the dollar. We are going to get into oil, guys. Obviously, oil making a big move overnight, but look at what we have here. Now, this is interesting today. So we know last week that the dollar topped out. I called that right here on the game plan, saying the dollar is now topping out. We had 3 down days in a row. Notice how on Friday initially, we can see the wick, right? And by the way, the white part on top, which goes up, where it doesn't have the color, that's called a wick. Below is called a tail. That's a technical analysis terms for the tail on top. It's really a wick and a tail on the bottom. Okay, so what we saw on Friday with the jobs number, it rallied and then we reversed on the dollar. The dollar actually fell on Friday. Now we are seeing a pop today, and this is very interesting. The dollar is rallying today, right? While the yields, we just looked at yields are coming down. So again, the dollar, okay, is going up while the yield is going down. Now that's very unusual. Usually the dollar and the yield have been rallying together. I mean, again, think about this chart, and this is the dollar chart, and remember we just looked at the yield chart, which was the same chart. So why are these going inverse to each other today? And the answer again comes back to geopolitical instability of what's going on in the Middle East, right? So the instability makes people run to the dollar for protection. It's still the reserve currency. In fact, in the last 6 months or so, of all the transactions done, 48% of transactions around the world were done in US dollars. That is a new all-time high, believe it or not. Now, again, you've probably heard of de-dollarization. You've heard of the BRICS nations trying to kind of get away from the dollar. We've heard about China maybe doing transactions in yen, or dollar, I should say, the yuan. But ultimately, it is still king dollar. And so what's happening here is people are buying bonds, which pushes yields down. They're also buying the dollar, which is pushing the dollar up. And that's how you get this inverse relationship in the dollar and the bond market. Okay, so that's just a little explanation. Based on this, do we change our viewpoint of where the dollar is going with a little bit of an up move here? Or do we just respect this high right here until proven otherwise? And the answer is you respect the charts until proven otherwise. As soon as you deviate, as soon as you let emotion get control, and by the way, it is very emotional out there. It is horrendous. It is horrific. All of those terms are very applicable. My heart goes out to what is going on, to the innocent lives being lost. But my job when I come in here, when I get behind a computer, is to do my job and stick to the data and let the data tell me. Because I'll tell you guys, as soon as you let emotion dictate your investments, you will ultimately lose. I've experienced this in my early career, and it will happen to me again if I let emotion gain control. Be unbiased, look at the charts. That is how you will do successful investing regardless of what is going on. All right. So here we go, guys. So we have the dollar chart. I do want to flip over to oil. Now, this is just, again, this is one of those scenarios where being a robot and doing what the robot basically mentality tells you to do turned out to be very successful. Now, again, I don't like the fact that I ended up making money on the back of what is going on in the Middle East, but it is what it is. And again, the charts gave us a heads up. They didn't tell us that this was going to happen, but the charts on Friday, and I went over this on Thursday and Friday in the oil chart, the oil chart had fallen with a time count to the downside. In these game plans, I've gone over time counts. If time counts is a foreign term to you, it will blow your mind to learn about them. So really think about that. But you have a time count, which is a number 7. 1, 2, 3, 4, 5, 6, 7, right into major technical support. Now, again, let me just zoom out a little bit because this is such major support that I have to show it all the way across. All right, so again, we go all the way back here, right? We can even go further, but let's just keep it somewhat on the tighter knit side here. So we literally have pivot, 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 and a 7 count down into a pivot point. Okay, so again, me being a technician, I don't think about emotion. A lot of people would look at this chart and say, oh my goodness, this is the scariest chart I've ever seen. It's collapsing. I don't want to catch a falling knife. Well, you're right. You don't want to catch a falling knife if you don't know what you're doing. You will get cut, essentially. But by managing position size and saying, okay, listen, I'm going to nibble. And when I say nibble, it's a small position. I'm going to start a small position right down here. You wake up and you have oil trading up 5% essentially. That was where it was around the highs of the day. It's come in just a little bit. And again, that is the chart alerting you to a situation that is higher probability of what the outcome is going to be, right? It's all a probability game. You look at the charts, you look to see what the charts are saying. You don't know what the heck is going to happen. I mean, again, it's no one, at least that I'm aware of, could have predicted what happened. But the chart was telling us probability signaled a bounce in oil. Here it is. Here's your bounce in oil. Very easy, profitable trade to have been had if you took it from my game plan right here. And like I say, guys, you guys make your own decisions. I'm just giving you the facts based on my analysis on the charts. You guys take it and do what you will with it. Okay, now again, what does this tell us about oil? Could oil continue to go up? And the answer is yes, it could, but probabilities have greatly swayed now because you're much higher. You're all the way up here. Here, your risk reward was relatively small. Now you've gone up, risk reward has changed. The trade metrics have now adjusted. You're not buying oil up here. All right, folks, that's not what you're doing. If you're doing that, what are you doing? You're reacting to emotion and you're extrapolating and you're saying that, oh my goodness, if Iran gets drawn in and the Middle East this and this, that's emotion. That's not fact. That's what ifs, what if, what if, what if. It is nonsense. You do that, you lose. It's just that simple. You don't lose on every trade. You get lucky, which actually reinforces the bad tactics, but ultimately you will lose over time. Trust me, it's happened to me many, many times. All right, so again, the point is, could oil go up? Yeah, I talked to you guys about that level there, $88 to $90 a barrel. But at this point, again, you want to say, okay, it's up here. Yeah, if you're in it and you're in the money, maybe you take a little bit off the table, you let the rest run, and then you keep a break-even stop. That's how real traders trade. You protect yourself, you put a little in your pocket, and you get ready for the next scenario. Now, if it dumps out, let's just say it goes up here, and then it falls. Where am I looking to buy? Well, look at this downsloping, this upsloping trend line, right? So we have this, and also look at this pivot low. Now, notice how this line is coming up, and if you extend this out somewhere over here, these two are going to meet, okay? And again, I know it's hard for you guys to see over there, but that's the point is that there will be more opportunities. Again, you have to be patient with charts. That's why I love trading stocks, crypto, and commodities is because there's always something to trade. There is always something to do. You don't have to be like, oh, and by the way, there's some people that just trade the S&P, right? Which is fine. But I say to myself, well, listen, I have a methodology reading charts from the Winning Trader series that a lot of you guys have taken that basically is pure charts. Doesn't matter if it's crypto, doesn't matter if it's stocks, doesn't matter if it's bonds, it doesn't matter dollar yields, whatever it is, it works. So why would I limit myself to something when I'm so discerning and so disciplined to only take the best trade setups, where if I'm just trading the S&P 500, I might only get, let's say, 1 or 2 trades a week. When I don't limit myself, there are trades everywhere to be had, and it's a lot more action, which means more profitability. All right, guys, so that's our little update here on oil. I do want to cover a couple other things here. We do need to go into the QQQ. Basically, just to rehash the Qs, guys, we are down on the NASDAQ right now, but not tremendously. And by the way, just some analysis on the overall market conditions, right? So basically, the market, and this is just purely market, I'm just discerning with the way the market is trading. The market is saying that what's going on in the Middle East, while it is worse than past situations, the market is not anticipating it to extend out into getting Iran involved and getting a lot of these other countries involved. And because of that, the markets are down, but they are not collapsing. Because of that, oil is up, but it's not over 100. If the whole Middle East started to go crazy, then absolutely you would be north of 100. So you have to take what the market is telling you, and again, you have to say that's what the market's telling me. Okay, now it could change, but you can't force it on the market, right? So that's the key. Now looking at the NASDAQ very quickly, this is the QQQ. We know that we've had this level here. I called this right over here. That was support right here, right here, right here. As a technician of the NASDAQ 100, the only thing you care about is when or if this line breaks. Same thing over here, when or if this line breaks. As of now, Friday was a great rally. Do we go up here? Well, right now we're trading back 50% down right in this move. But again, it's which angle or which trend line breaks. Per what I think is going to happen, and this is just based on charting, I do ultimately think that the downside breaks, but you could easily go up and test the higher end first. Okay, so again, you don't have to worry about anything in here. Doesn't really matter. It doesn't. It's just choppiness. This is where the algos make all the money for the institutions. When you got like little Johnny smart trader out there thinking he's a genius and he's trying to force trades in this range and he's like getting whipped out because the algorithms will purposely push the market in those ranges. It's when it breaks one way or the other that the big move begins, the next leg of the journey of the market. All right, so again, very, very important to understand that. Quickly flipping over to the SPY as well to keep you guys informed on that. SPY, we know we have a ton of support down here, right? And that continues to be the nature of the beast. We could continue up. I still think ultimately we probably need to fill this gap. I even think that you have to go and revisit, right? Maybe even, minimum you're going to go touch the retrace of the head and shoulders. But I even think the gap fill could get taken. Now, you might say, well, if I'm a technician, we have the head and shoulders, right? Okay, there's your head and shoulders. Well, if you break back above the neckline and you get here, the head and shoulders pattern fails, right? That's the technical analysis of how head and shoulder patterns fail. When they break the neckline to trigger, it triggered. If it gets back above, it fails. Now, my thought process as an experienced technical trader is that I actually want the head and shoulders pattern to fail. The reason why I do is because everyone knows this pattern. You go on any website, everyone was talking about this. When it broke, it made people too bearish. You now need to kind of make it go up. If the markets go up at some point and negate the head and shoulders, everyone's going to flip and say, oh, the head and shoulders has been negated. It is now a bullish market. That's what I want to see for the next leg to come down. It's the contrarian thought process that is going to lead you ultimately to success. All right, so ultimately, for me, this is your next leg down here, basically a break of 418. That kickstart to move basically down to 400 on the SPY or 4,000 on the S&P 500. All right, guys, we're going to flip it over here. We have to talk about gold. I want to go through some of the metals. We're going to look at Bitcoin as well. Bitcoin is down a little bit. That does tell us some information here. But basically, again, look at the chart. This is the chart of gold. Now, going into this weekend or even late last week, would you have been, just looking at this chart, think about this logically, would you have been a buyer or a seller of gold? And the answer is, based on the chart, you would have been a buyer, right? Technicals, again, telling us so much information, not being 100% accurate. Remember that. So many people think, oh, technicals in this one situation didn't work, so all of technical analysis is BS. That's not true. Technicals give you probabilities, and they put probabilities on your side. So essentially what we know on gold was that we had a very defined channel, and we were right at the low end. In addition, we had all this support down here, and what happens to gold? It bounces. Did we know that we were going to have instability geopolitically with the war? And no, we didn't know any of that. But the chart, again, was guiding us to the higher probability outcome, which, again, put us in that position to say, look for a bounce in gold. Really remarkable. And, again, I've done this now for 24 years, crazy amount of time, and it still blows my mind how the charts can really help us learn. Now, one thing I want to show you is the silver chart. Silver had an awesome bounce on Friday, right? Same kind of deal. Made a lot of sense that it would bounce. But look at today. Today, silver was up here, and it's come all the way back in basically to the flat line. Why? Well, I'll tell you. Based on the instability in the world right now, there's more and more feeling that the economy is going to slow. And the economy, that's partially why we're seeing yields come down, also the strive for safety in bonds. But I do think that, again, All of this is additionally adding pressure to the global environment and the economy globally, and that again could be a small negative for silver. Now again, do I like silver long term? Yes. This is still a very bullish pattern, right? All of this is a bullish pattern, but again, it just makes sense why silver might underperform today with the instability in the world. Another chart that is down, interestingly enough, and reversed is palladium. So palladium, actually, I love palladium at this level. All right, this again, huge technical level down here, but palladium is down on the day. It's down 0.2%, right? So again, we're seeing a metal that is used industrially that is struggling here because of worries globally, all of that kind of stuff. And if we just look at palladium, guys, look at this. Look at that on palladium, right? And again, going back to this high, and then the breakout, and you're back to the retrace to the scene of the crime. That's a pretty cool chart there. All right, I want to keep going through as we are running out of time, and I still have a ton to show you guys. Look at copper. Copper again, guys, let me ask you a question. Is this copper chart bullish or bearish? And then what does it mean? The copper chart very clearly range bound inside a wedge pattern and now has broken. What does that tell us? It means there is a global slowdown in process. This is the weekly chart, by the way. But the fact that it has broken is very telling. Remember, copper is a metal that is basically all about industry, about growth, about building. And so when this breaks down, it usually tells us that the global picture is souring. It's getting murkier. We know China's in a mess right now, even though I do like their economy a little bit on that front, or at least the stock market-wise. But again, this is a breakdown on copper. All right, I will get to Bitcoin before we end it here. I'm going to have to go over other charts tomorrow because I don't have enough time. Bitcoin is seeing a little downside, but I would just say this, guys. To me, Bitcoin, and I said this last week, it remains bullish, okay? As long as it holds this 25,500 area, which is a downsloping trend line that even goes off my screen, but basically what we saw a breakout here. You could even look at this as being bullish consolidation. Now, it is down today, and what does that tell us, guys? It tells us that it's still a risk asset. Notice again, and this is really important, because so many people try to tell me that, oh no, if we have trouble in the world, Bitcoin will soar. And the answer is very clearly that's not the case. Because, again, gold is going like this. Bitcoin is not down a lot, but it's not going up. So it is still a risk asset. We have to respect that. And therefore, again, it is coming in. But having said that, this to me is bullish potential consolidation. As long as it holds this area down here around 25,500, 600, it remains bullish. All right. Lots to talk about today, guys. I always feel like I could make these into 1 hour. I'm not going to do that to you. I can't do that to myself either because they are exhausting. I put a lot of energy and effort into these game plans, and I appreciate, like I say, all the kind words that you guys share with me as I'm trying to divulge. Again, a little bit of a somber mood today, as again, it's some ugly stuff going on in the world. But I do want to just say this, guys. Be safe, hug your family, hug your parents, hug your kids, hug your grandparents out there. And again, please join me tomorrow. I will give you guys more updates on the markets, on everything going on chart-wise and data-wise. And don't forget, today at 11, there's going to be the No Shill Zone. I'll be with Ben Cowan, and we will be going over lots of stuff data-driven as well. Thank you again for tuning in, guys. My name is 𝗶𝘁𝗶𝘁 from VerifiedInvesting.com. You guys take care.